Hello and welcome to the Free Financial Forecast. Today is Tuesday, April 5th. I'm Robert Charles, and in this video, you'll discover all you need to know to trade and forecast Twitter. The reason we're looking at Twitter, of course, as I'm sure you've seen in the news, is that Elon Musk bought roughly 9.2% of the company. He had tweeted out earlier his concern about the censorship on the internet and mentioned Twitter specifically. So there's all sorts of rumors and innuendo flying around as to what this purchase means, and that has garnered a lot of interest in the stock. However, you don't need to rely on rumors and innuendo when you're investing. In fact, it's really not a great idea. You can look at objective facts, just as we do every day as we analyze all the major markets in the manner I'm about to show you here with Twitter. You can find out more at jimokocloudtrends.com, and the link is in the description. Also, be sure to subscribe, and you'll see our free daily forecast where we switch markets every day. Now, to get into Twitter, what you're seeing on these charts is on the top is our long-term weekly chart. In the middle is our medium-term daily chart, and underneath is the short-term 60-minute chart. We'll look at them in turn. When we look at a chart to bring it into focus, we have the cloud system on the charts. This is the shaded areas of the cloud with some moving averages. These are calculated differently than typical moving averages, but they act similarly. We also have our wave count. This is proprietary to us. There's a wave count built into the cloud system. We've slightly modified it, but we do teach the original approach as well. Now, we also have targets in many of these charts. There's not a lot to look at target-wise on this weekly chart at the moment, but we do look at targets. The targets are underneath it down here. This is a support zone. The black line represents where we think it's most likely to go inside the zone. These targets are excellent. You should really pay attention to them if you're watching our analysis. You take a look at now this weekly chart. When the stock market hit some highs back in February 21 and sold off, unlike the general market, which did not go into a downtrend, if you take a look at the S&P 500, for example, this is its weekly chart. Notice it's holding the cloud, did not go into a downtrend, whereas Twitter, there we are. Twitter did go underneath the cloud. Also, watch that lagging line, and went underneath the cloud as well. So that means it's a downtrend. So the wave count was 0, 1, 2 with a big 3, as you would expect typically, and a 4. Notice where it stopped. It stopped roughly at this span B, this flat zone here, that often will act as support or resistance, in this case support, because the market was coming down to it. And here we get the bounce. So it basically bottomed out around towards the end of February and has been rising ever since. And naturally, the 9.2% purchase of Mr. Musk sent the market soaring. Where did it stop so far? Let's take a look. It's right on what we call the baseline. This is a moving average, a slower, stronger moving average of the cloud system. And our lagging line is almost up to the cloud where it should find resistance. I wouldn't be surprised to see a little bit of a higher move to get that lagging line up to the cloud. However, where it's not strong resistance. If it does break conclusively this line, the price will almost certainly go up and test this cloud. But when you see the resistance on the lower time frames, that looks like a less likely scenario than typical. This is still in a bear market, so on this weekly chart, until we get an uptrend defined as price going above the cloud and the lagging line going above the cloud, we are anticipating a move down into these price targets. We've already had, notice, a lower high. We're getting another lower high potentially, and we've also had a lower low. So we're in a strong downtrend here, and most of the time, markets will break down back into their target zone in the direction they came. This market was simply oversold. It's now taking a rest. That's how it looks on the weekly chart. Now, on the daily chart, it's a bit of a different story. We still have that strong downtrend, of course, and naturally it's bottoming in the same place because all these markets are relative. We actually had a rare double buy signal back on March 18th, meaning we used proprietary signals on our charts, and we had 2 of them hit on the same bar. That's very unusual and a very strong signal when it happens, but there it was, and you can see the results. We do have another buy from yesterday's action. Today now is trading up into the next resistance point. Whether this would have triggered you in or not, had you heard of the signal yesterday, our signals, incidentally, are above the high. Now, you notice how beautifully this trade worked when it got a clean break above the high, and there it went. Now, we're getting a break above the high today of yesterday's bar, but you will note that we are now at resistance. These are the fib numbers from this high to this low. This is, of course, where the wave counts come in place. This was a wave here. I simply long since taken it off the chart because it's now largely irrelevant, but I did use it to create these targets. And look how beautifully they worked. Market stopped here at the halfway point and has now moved up to the 0.618. Take a look to the left and you'll note there's another span B, a flat zone. When you see these flat span Bs, you'll have to watch them. This is the slower line of the cloud. The slower line is the stronger of the two. This is the faster span A underneath, and the distance between is what we call the cloud. Now, so we're at a resistance point, double resistance point on the daily. Don't forget where we were on the weekly. Resistance point. So we're noticing a trend. Now I have 2 time frames, resistance on both, which means we are somewhat overbought on the daily chart as well, even though we have a buy signal. Assuming that the market does not go into a tailspin tomorrow with tomorrow's trading and fill this gap, which it could do, I think that's less likely. Markets don't like gaps like this. They tend to fill them. But I don't think that's likely going to happen tomorrow. We're going to be in an uptrend. Right now, we technically aren't, because we like to see 3 bars of this lag line above the cloud before we conclude it that it is. We have 2 right now, and again, unless we really fall out of bed, this cloud's pretty far beneath the lagging line. So more than likely tomorrow we will be in a daily uptrend, and that's a significant change. Trend changes on the daily chart and the weekly chart especially are significant, and we're more than likely going to be an uptrend tomorrow, which suggests we eventually will break this area and go up to the 0.786. So if you are along this market, there's your next target, 60.47. And you also might note where it is. Take a look to the left. You'll see all of these old support areas, these pivots in here, sort of cup and handle that got broken. This should act as resistance. And these 0.786 is not too far off that area, so that's the next resistance area. If you are long off this daily chart, that's the market, the price target you should be looking for. It's unlikely, however, that it's going to take it off straight up to it. You'll see why when we look at the 60-minute, and we like to look at multiple time frames because it gives us context as to what this market's likely to do. Now, on the 60-minute chart, this is in a pretty strong uptrend. You'll notice this upward leaning congestion zone that the market was in. Markets tend to move vertically, then horizontally. Vertically, what's the next likely move? Horizontal to down. Look how overbought this market is on the 60-minute chart. This is the original target. This is the extended target. The 3 is pretty rare. You almost never see 4s. You see them on occasion, very rare. This is way overbought. The cloud acts as the equilibrium point. Notice when it went flat where price went to the cloud. This is where price wants to go. Something has to propel it out of there. Obviously, the 9.2% purchase did. It's more than likely going to go flat to down, let the cloud catch up. Now, that's the 3rd time frame, right? Resistance, right? The weekly, daily, and 60-minute, all at resistance. Not likely this market's going to take off to the upside anytime soon. We're looking at at least a few days of going flat. Over the next few days, flat to down, I think is the next Twitter move, even though it's in a strong uptrend on the 60-minute. It should be in an uptrend tomorrow on the daily. We have to wait and see. This is going to be a tough nut to crack, the resistance points on this weekly chart. If it does, it'll be quite bullish indeed, and that might propel the markets up. We'll see. In any event, you can see the general market is still in an uptrend. So Twitter may be wanting to join that party, but I do think we have a few days of flat in front of us. So that's our look at Twitter. There you go. You don't need to worry about the rumors now. You know pretty much what to expect in this market over the next at least handful of days and where the resistance and targets are going forward over the next few weeks. I thanks so much for watching. I hope you'll return tomorrow where we will take a look at another market, either in the news or that has some interesting technical aspect to it. Please don't forget to check out our website, which is in the description below, and to subscribe here, and you'll get notification when the next video goes up. Thanks again for watching. Have a great rest of your day.